Imagine you are a farmer. Months before harvesting a crop, you have already invested everything you have. You have bought seeds, fertilizer, diesel, hired labor, and maybe taken a loan from the bank. Everything is ready. Now, only one thing is left to happen, that is rain. If it arrives on time, your crop grows, you earn money, then you repay your loan, and life moves on. But if it doesn't, everything changes. The harvest shrinks, your incomes and savings disappear, but the loan doesn't. Now zoom out for a moment and think. It is almost a recurring event that happens every year, affecting millions of farmers. And when millions of farmers face the same uncertainty, it is not just a farming problem, it becomes more of an economic problem. But this year, here's what surprised me. India wasn't just waiting for the rain anymore. It was financially trying to prepare for it. Because in May 2026, India introduced something that sounds almost impossible, a financial trading product linked to rainfall, which almost immediately raises a question and a fascinating one. How do you trade something that nobody owns? Nobody generally can manufacture nor control it. So, what exactly is it? Well, to answer that, we first need to understand why does rain hold so much power in India's economy? Why rain matters in India? So let's start with this simple question. Because for India, rain isn't just a part of a weather forecast. It is a part of the major chunk of the economy where most people are still directly or indirectly dependent upon agriculture. Think about that same farmer. Months before harvesting anything, he spends money on seeds, fertilizer, diesel, labor, machinery, even irrigation. Everything is ready, the land has been prepared, the seed is already in the soil. Now, everything depends upon one thing, the monsoon. And if the rain arrives on time, the crop grows. If it doesn't, the entire season's income suddenly becomes uncertain. And for anyone, uncertainty is expensive and fearful. When the supply falls, prices begin to rise. You notice it at the shop. Rice becomes more expensive, and almost everything on your grocery bill starts costing more. And that's food inflation. And if this inflation stays high, the Reserve Bank of India or RBI generally has a difficult decision to make to increase the interest rates, and suddenly loans become expensive. Business starts to delay their expansion, consumers start spending less, and economic growth begins to slow down. Think about that chain for a second. A delayed monsoon can eventually affect your grocery bill, your home loan, your business investments, even India's GDP. And that's why, ladies and gentlemen, every year economists watch the monsoon almost as closely as farmers do. Because rainfall doesn't just grow crops, for India, it quietly shapes the entire economy. And well, this naturally raises a question. If rainfall creates such a massive financial uncertainty, why wasn't there already a better way to manage it? Well, to answer that, already we have something. As rainfall has always been such a massive risk, and crop insurance is the thing that has been trying to mitigate the loss. But crop insurance isn't enough for all cases because crop insurance work after the damage has already happened. It helps you to recover the loss, but it doesn't remove the uncertainty that came beforehand. The financial markets thought of instead of asking how much damage has already happened, they asked what we can reduce as a financial impact before the damage has even occurred. And that single shift of thinking gave birth to something India has never seen before. In May 2026, the National Commodities and Derivative Exchange, better known as NCDEX, introduced India's first rainfall derivative, naming Rain Mumbai. Now, don't picture that as people buying clouds or betting on weather or tomorrow's weather. This is not actually what's happening. Nobody owns the rain, nobody controls monsoon till date. This contract actually tracks the rainfall data. More specifically, it compares the actual rainfall recorded by IMD or Indian Meteorological Department against the predefined rainfall levels. And if rainfall exceeds those levels, the contract settles automatically. No crop inspection, no damage service, no waiting months of verification. The settlement depends on rainfall data, not crop damage. For example, imagine you own a sugar mill. Your business depends upon sugarcane depends upon rainfall. If rainfall is poor, farmers grows less sugarcane, and less sugarcane means your factory receives less raw materials, and thus production falls and the profit falls too. Honestly, nobody can control the weather, but you can mitigate some of it. Wouldn't you prepare for it if the financial impact created by weather could be mitigated? And ladies and gentlemen, that's exactly what Rainmumbai contract is trying to do. Not to protect crops, but to protect the stakeholders from the finite risk of rainfall deviation. At first glance, this sounds like a brilliant idea. So why isn't everyone using it? Because the innovation has one major limitation, and that's called basis risk. Imagine your farm receives very little rainfall, your crop fails, but at the same time Mumbai receives normal rainfall. Since the contract is linked to Mumbai's rainfall, you will not be paid anything, even though your farm suffered a loss. The rainfall used to settle the contract isn't always the same rainfall that affects your business location. And that's why rainfall derivatives aren't a replacement for crop insurance. They're another tool for a complete another reason. Designed for a different purpose but with the similar intent. And to add on, the market is still very new, trading volumes are low, so liquidity remains tight. And most farmers and businesses still don't participate in commodities market as of yet. So while the idea may be revolutionary, but the adoption ecosystem around it is still evolving, and the present it is only at its nascent stage. So does that mean the idea has failed? To be honest, not really, because for the first time in India's history, we can buy protection when the rain doesn't arrive. For a farmer who has spent his entire life looking at the sky with hope and uncertainty, the protection one day may just become as valuable as rain itself. Because the greatest financial innovations don't eliminate uncertainty, they help us to prepare for it. And perhaps that's the real story. Thank you so much for following along. And if this perspective intrigued you, I'd love to hear your thoughts in the comments. See you in the next story.